Everybody is asking in the market right now, when is quantitative easing going to actually happen? We're going to break it down for you. You don't want to miss it. Let's jump right in. Let's go over to our partner today, and that is Tangem. This is where you guys can begin your crypto journey. And I know there's a lot of you that are brand new to the crypto game. And one of the things that you need to put on your checklist is getting into self-custody. And self-custody, this is the place to do it. Go over to tangem.com. You guys can join and, of course, get your own card, get a 3-card set, start it up, works with your phone, and a very, very solid app. This, of course, has a lot of new features coming within this app, including yield, also including a new debit card where you can spend your crypto. There's so many different options here. You guys can still get the Black Friday special. It's stacked, so use our code down below to get the additional discount and get started on going into self-custody. Now, the point that we wanted to break into today was really taking a look at QE. And if you look at the market and how it has responded with QE over the past several cycles, this chart right here kind of breaks it down for you. What you're looking at here is Bitcoin dominance against what we're seeing in terms of quantitative easing. The green section is easing. Obviously, quantitative tightening is the red. And then you have these little gaps that exist in between these. You'll notice here that during tightening, we have Bitcoin dominance going up. It starts to stabilize, and now we're in a point now where quantitative easing could start to occur. The key here, though, is the gap in between. What does that look like over the next few months, next few days, next few weeks? Let us paint this out for you guys, because this is very critical on where the market will respond. One of the things you can kind of look at here, of course, is where interest rates have a lot to do with this. So as you can see here, quantitative easing begins when we start to see the Fed funds rates start to dip below 2%. And that's this red area that you're looking at right here. So that's when we see the injection of capital. All right, so what you're looking at right here is this little section right here. What that simply means is this is going to stabilize the market around easing. This, of course, is going to be in conjunction with a lot of rate cuts that are going to be coming down the pipe. And this question is how many of those rate cuts are going to be able to get us under that 2% window, which is where QE will begin. This is the thing that we're looking at right now. Polymarket, how many Fed rate cuts in 2026? Right now, you can kind of see, well, we've got 3, there's a 4 in there. But if you look at the chart, you'll start to see that once you get above 4, add those all together. You got 14% on 5, 6%, 7, 5%, 8 rate cuts, 4%. You start to accumulate all this, and what we're looking at is a probability of maybe plus 40% of getting 4 or more rate cuts in 2026. That would be gargantuan because it starts to lead into something that we've talked about for a while, and that is the release of liquidity. The reason this plays into liquidity is everybody is parked in money markets, stable coins earning yield, all of these things. Those will immediately get impacted, and we'll see a drawdown of that liquidity, and it's going to be looking for a home. Now, the key is where are those early market movers going to go? One thing that could make the Fed respond faster, even faster than what we may see right now in early 2026, is what's happening in Japan right now. 9 years ago, we had a 30-year government bond yield hit a record low of 0.02. Now it's a record of 3.43. This is a huge increase. So basically, the yen is going to start being able to utilize the market in terms of how it will affect the U.S. market. And this, of course, is going to get into the liquidity release I'm talking about. Now, let me go to a clip real quick, because this will get into a little more detail on why the Fed might respond to the Japanese situation. Take a look.
One of the things that could happen is Japan has been a big buyer of treasuries. Obviously, we know China is also a big buyer of treasuries. Maybe they need to raise cash in order to support liquidity. They might have to unload treasuries in order to do so. I think the Fed probably steps in first and doesn't necessarily say that it's because of this, but there's already a couple of firms out there talking about the Fed needing to expand its balance sheet again come later this month or even in January because of the liquidity that's dried up in some of the overnight lending markets. But it might be getting uncomfortably tight for the Fed, in which case they will act in order to support liquidity of markets, because one of their mandates, and it's not one that's talked about very much, but one of their mandates is financial stability and the proper functioning of markets. So if they need to do something to support just those overnight funding markets to create liquidity just for the banks, I think they will.
Okay, so there's a lot unwrapping here. Of course, many people would look at this and say, well, listen, if Japan unwinds their trade against the U.S. Treasury, that puts a lot of pressure on the Dixie, the dollar. It also puts a lot of pressure on the United States because we have chosen the route of stablecoins. Now, the question will be, if yield is going down on the stablecoins because interest rates are dropping, what happens to the situation around stablecoins? Well, the only solution is probably going to be velocity, and that's going to get into how much is it being used. And that's the key thing that I think has to be done and adopted here, which is why all this regulation is so important right now. If you look at Circle's stock, this is the weekly. Remember, we go way up here after its opening, 180 bucks. Circle has been declining since then. It's stabilized here over the last month at around 80 bucks. It's very possible we could see its IPO rate around 68 bucks. Reason being is there will be a lot less liquidity and a lot less people looking at Circle, I think, in general. I want to play a clip for you that kind of proves this. Take a look.
We were talking about this last hour. If Circle is fundamentally a spread play on high interest rates and the era of higher interest rates is ending, if they lose $100 million in revenue every time the Fed cuts rates by 25 basis points, that's not a great name to have. I mean, that would explain why they're back down towards their IPO price, would it not?
It's if the business model is sensitive to rates, it's sensitive to rates. If you're a NIM net interest margin model, then you are beholden to the rate curve. Tether, on the other hand, is an interesting model. They retain a lot of that margin, and then they sort of reinvest it on their own balance sheet. So there's many different models out there. You have things like Athena, which you're actually in a stable coin that has a basis trade that generates yield. So it's almost like utility in the back end. But stables are a good business.
I'm sure you know is that Circle right now shares their revenue with Coinbase. And that's a program that's been built really since the inception because of the distribution that Coinbase has. Tether's on a little bit of a different plane. They, of course, are going into more gold, Bitcoin, things like that. I think this is going to get very interesting over the next few months and possibly over the next year of how stablecoins will play out. You may have some new players that really get into. They mentioned Athena. If you look at algorithmic stablecoins, Athena being one of them, this is something that's being held by World LibertyFi. This could be where markets could vacate into a lot of other tokens that could line up right here if you look at what's going on with Ethereum. And if you look at first movers, anytime you see a market run within the altcoins, it's going to be Ethereum. This, of course, is looking at World Liberty Finance and what their portfolio tokens are right now. ETH is their top token. Obviously, you can see others in there. But I think the problem will be a lot of people will be a little bit confused, and Ethereum will most likely be on the front end of this in terms of a win. All this plays into so many different scenarios. We looked at this quite some time ago. This was a video we did a year ago. It was in reference to the Japanese stablecoin and what Sonium was doing, and along with Sony. All this plays out right now because Sony Blockchain now has partnered with Startail. This is the launch of their new stablecoin for Sonium. And the ecosystem, remember, the ecosystem as well. One other thing to consider is how the yen may end up accelerating its borrow rate to a very low percentage, which will carry over that. This, of course, is in comparison to what we're seeing right now in places like Aave, where you're seeing borrow rates at almost 5.5% coming in from Tether, 4+% right there on USDC, and so on, 3% on RLUSD. Point being is this will open up a lot of opportunity. Now, I want to go to a clip real quick because this will break down a little bit more what Soda, this of course is the lead over at Sonium, of why the yen could bring in a lot of new money. Take a look.
We can see it more as a super app, and connected to this includes Sonium, Future as well, the chain as well that we are cooperating with, SBI as well.
And other things, one more thing, one alpha is we are pretty much focusing on the stablecoin as well, which is the USD and the Japanese yen. We do have a strong advantage in the JPY stablecoin market because I'm a Japanese founder, and the JPY is one of the most trusted currency across the globe, recognized as one of the most lowest borrowing rate currency in the market. In the long run, maybe you can manage a tokenized stock, RWA, and a couple of other things, such as gaming, music, movie, and so on.
All right, so what Soda was getting at there is that basically it's going to make it very inexpensive to get loans over there within their ecosystem. This will drive liquidity into the market. That will then escape into other aspects of crypto in general. If you just look at the Japanese component around digital lending and how fast it's grown, this has been fantastic. And this is just the beginning. So Imagine what we see when really global liquidity starts to hit the market, especially around the United States. Don't forget, this, of course, is what it looks like, USDSC out there on Sonium. They've already started doing one thing, which is starting to create this priority access. This is going to create rewards. This, of course, gets people to engage. That is another factor. Then you have all the banks that are now available for the Sonium platform. And this, of course, starts to really encroach on a lot of things. We reported on this Untitled Bank some time ago, and I think it was this right here. This is kind of gives you a connection into Morpho. Morpho, of course, the United States lending arm, I won't call it of Coinbase, but that's one of the biggest partners. And Morpho continues to climb up the charts in terms of overall growth in lending. This is why all of this matters, because now you've got Untitled Bank also correlated with Morpho, now correlated with low-cost lending over on the Sonium blockchain, hence the yen. All that is where it plugs into liquidity injecting into the system. That's the key around quantitative easing that all this plays into. The other thing you have that the Japanese are doing is this tax reduction, which will take effect in 2027, and it's going from 55%, this is crypto tax, from 55% to a max of 20%. The amount of people in the Pacific Asian area is going to be massive in terms of where we could see trades coming into Japan just because of the tax benefit that they're starting to move. Now, will Trump do something like that for crypto? It's very possible that he'll flank that. He's very friendly with the Japanese Prime Minister. But the Japanese have also finalized another $117 billion in extra budget to fund this stimulus. This, of course, simply starts to devalue the yen, which means could they be alternately moving to crypto much faster, simply saying, well, we're just going to use the yen for interbank transfers, et cetera. And the real value is going to be built around all of what's happening in crypto. Take this into consideration. I'm looking at this tweet right here. This is BlackRock simply saying, hey, another 12 trillion. They say U.S. national debt will accelerate, and the only thing that's going to adopt or basically solve that is going to be crypto adoption. Now imagine our debt compared to the Japanese debt, which is gargantuan, even compared to our debt. If they think it's going to accelerate here, imagine what it's going to do in Japan. Again, back to a new liquidity portal into the markets could be coming through the Japanese markets. And this is a global community that has been out there in the reverse carry trade for quite some time. And this is pretty much what has propped up U.S. Treasuries. The other thing that plays into this is where it gets interesting, because now you have a lot of community bankers asking the OCC to block Sony's crypto bank and everything that they're doing here. So that tells you that they're concerned. Couple of points in the article. The ICBA says Sony's bank charter would let it issue deposit-like stablecoins outside traditional banking rules. Not a good thing. The group's concerns over this trust group are overstated, and this, of course, would be driven by big bank interests. Point being is Sony's going to integrate this into a lot more than just the economy. They're going to go also into the gaming side of it. We've talked about this before. Nobody likes paying these credit card fees because that's one of the other areas that are going to get hit. Here's PlayStation talking about going crypto, using the Sony stablecoin. This could be used for gaming. This, of course, would completely dismantle what's going on in the market around, guess what? That's right, credit card. It would reduce payment fees often incurred in these platforms. So again, another big opportunity here to really shift into the next phase of how crypto adoption is going to take place. You take all of that, and then you apply this to the Clarity Act. And whether or not the Clarity Act is going to be a catalyst for crypto in general, we put out a poll simply asking, what would it help more, Bitcoin or crypto in general? Crypto in general was pretty much the winner, hands down. That's the point we're getting at here, is watching these early liquidity moves, looking at the global macro of what's happening around the world. Where is that money going to come from? How is stablecoins going to be evolved? And where the Fed is going to start pulling the trigger and begin quantitative easing. We believe it's somewhere in the early parts of 2026. Watch very closely. Make sure if you're not subscribed to the channel, do that right now. Get in on our free member group, which is the Bear Market Edge. Very easy to join. Click the link down below. Follow me on X @Paul Barron. We'll catch you next time right here on The Paul Barron Show.